Hello and welcome to another update video about HBAR. HBAR has the potential to start a pullback from here. However, as I mentioned already in the last video, there's absolutely no evidence that it's doing that, but this is an area to watch and I will explain why. However, there's also a scenario in which we could stretch higher more directly, and I will tell you how we can distinguish these two scenarios from each other. Most importantly, they are both bullish. Okay, so if we have two bullish scenarios, then this gives a bit of trust in the overall trend. Even though I have to highlight here that we are not dealing with impulsive structures here, so we have to be on the side of caution. Impulses are the most reliable patterns. This here looks more like well, either a diagonal, which is the yellow scenario there, and we are going to talk about it, or an ABC structure in the white count. So in the yellow count, as I said, we're likely dealing here with a 5-wave pattern to the upside. Wave 1, wave 2, wave 3, 4, 5. The third wave should push higher in the yellow count. It hasn't reached my minimum expectation and also not the ideal target. Ideal target for a third wave. First target is a 16.8 cent level. In this case, the 1.38 extension, better, higher. 21.6 cents would be better. Okay, that would be the better or more reliable target. You know, the 1.618 extension, then we should get a wave 4 pullback and a wave 5 to complete this leading diagonal in a wave 1. Then we should get a wave 2 pullback and so on. This is one scenario which I'm following, which however would require the price to push higher more directly, minimally, absolutely minimally to 14.48 cents. But looking at the internal wave structure, which is an ABC structure, it points rather towards 21 cents, maybe even a little higher, because what we need to do with these subwaves here, we're looking at this ABC structure in wave A, then we have the B wave pullback and the C wave rally. And to be honest, the subwave structure points towards higher prices because the C wave is usually the same length of the A wave, maybe even a bit longer. So, and if I measure that and if I'm watching for that 100% extension level, then should get to 17 cents, 100% extension. That's pretty much where that 1.38 extension level is if I just measure the target for the third wave. So that would be pretty good for the price to get there to confirm the yellow count. Then a wave 4 pullback, as I said, which might get to the 11 cent level. We often see it that a fourth wave retraces into the area of the 100% extension and then the fifth wave to the upside, okay? And that could reach obviously 1 or 2 fib levels higher than the third wave. For example, we talk about 21.6 cents or even 32.2. This is one wave count. In this scenario, the last swing low should really hold. So that's a distinguishing factor. I mean, it already, the way this is structured as an ABC structure, really the last low needs to hold 6.7 cents. If that level breaks, we're likely in the white count. So that is the level where we can say, okay, we're distinguishing the counts, but maybe you don't want to wait that long. Maybe there's another level that can give you a warning earlier. Best level I can give you then in that case is 7.6 cents. A sustained break below this 78.6 retracement level is already a good warning that this yellow count isn't going to play out anymore. And then if we are talking about a B wave pullback, yeah, then we have a different structure, because then we're dealing with a large ABC structure to the upside. It's just a different pattern overall. If we see more evidence around this, then we can talk about that a little more. It's at the moment my alternative, but to be honest, in this scenario, we are dealing with an A, B, C structure. And that could, if we are lucky, because 3-wave tops are always difficult, but if this is an ABC structure, yeah, if it's bullish, it could form a B-wave pullback and rally higher. The problem is that at the moment it's the alternative, but this 100% extension level is an ideal target for wave C here. Okay, so it currently is confirming the white count to a degree, because it's basically reacting to and respecting that 100% extension level. A strong rejection from here, could lead to a B-wave pullback. And that would be further confirmed with a break below that 6.7 cent level. And then, yeah, we can also, if we see a rejection, if we see a pullback, we can calculate a support zone for wave B. That's how I see HBAR at the moment. When does this entire chart get bearish? I will give you the level that, if broken, will highlight that it's probably bearish and we see another bear market low. That's at 5 cents. So it requires basically a little less than a 50%, no, a little more than a 50% decline to confirm that new bear market lows are coming. Because the B wave support area would be exactly this, but if we break below it, that indicates that we have no reliable bullish level left, but it's not at the moment anything I'm primarily watching for. That's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.